the inventory has stayed so low that with this property, I put it on, and within 2 days, I had 3 offers and 30 showings. And I still am getting people calling saying, can we put in a backup?
You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupe as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures, from multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
All right, everybody. Welcome to another episode of the Alternative Investor Mastermind. Really excited today to have Ben Finn on the show. Ben is a top producing broker in Vail, Colorado. He's also an investor and has invested in a few deals with us. So it's always great to have a current investor on the show. Ben, thanks for joining today.
Thanks for having me, Jack. I appreciate it.
Great. So do me a favor. Tell us a little bit about what your path was, how you got started, what you thought you might do, and how you got into real estate.
So I guess it was a bit of an accident getting into real estate, and it was my initial path was looking at maybe becoming an attorney, and I think there's plenty of those, although there's plenty of brokers too out there. And also looking at politics and things like that. So that was kind of more the focus of my study. And then graduating in 2009 put a little damper on the job market, and it was kind of a weird time to be kind of entering that zone. So the world kind of took me to some traveling, and then I ended up back in Boston, which is where I'm from, and there happened to be a Vail Resorts job fair. And I was like, I'm not living at home anymore. And they hired me to be a ski instructor, and ended up in Vail, and then tore my ACL at the end of the first year. And unfortunately, or fortunately, that's probably the best thing that ever happened to me, because it kept me in Vail. I ended up getting my first job at just a local brokerage as a admin, and it spiraled from there really quickly. It was something that I caught on to pretty quick, and then fortunately had some great mentors early on who needed some help and were willing to teach me. And, fortunately that was kind of where it went. And so now about 13 years later, we're still in it and getting a little more sophisticated and working in a very, I would say, imbalanced market. It's a interesting. It's a very interesting collaboration of people who are, ultra net or high net worth, very sophisticated. And then you have people who are investment oriented. And then you have people who just, this is what they want. So there's a bit of everything here, where you have just people who want to live here. You have almost every sort of real estate mind is in a market like this. And it's fun to navigate.
Well, yeah, it sounds like a super interesting place. We have similar stories about getting out of kind of college at bad times. So mine was the 2001 .com crash, and I thought I was going to be more of a computer consultant, or I was super into the technology. The internet was still pretty new, and then all of a sudden there was very few jobs, and it just wasn't what I thought it would be. So it's amazing how we all have adapted in whatever way we needed to. Yeah,
and it's typically the job picks you. Fortunately, I think for all of us who've gotten involved in this, we enjoy it. It's a fun game. It's a fun conversation. And we have a bit of a mix between the emotional side of real estate and the lifestyle side of real estate and the numbers side of real estate here. But there is a interesting balance between the two. And, coming here at 23 years old and not really having a network of high net worth people who wanted second homes kind of forced my hand into manufacturing my own deals and finding margins and inefficiencies in the market, which you can find anywhere. Just here, it's a little different conversation, and the numbers are a little different, and the product's a little different. We're not looking at typically, it's not commercial leasing, and it's not office buildings, and it's not there's some of that, but for the most part, we're trying to find those margins and those opportunities in just luxury real estate. And they exist. It's interesting.
So you started with no network, and you weren't from the area. And how did you manage that? Like, what types of marketing? How did you find your initial clients or investors?
So it was a bit of a mix. So I did have a network, which is important. Fortunately, I lived here and I met people who I knew had access to resources. And for me, it was kind of an easy pitch initially, just being like, I think there is some money here. Would you explore this with me? And a lot of people, they kind of found it fun when they had that kind of money to play in Vail. There's, I think, a little bit of cachet to it for them to be saying, oh, I'm flipping a house in Vail, or I'm doing this or that. And at that time too, the market was very different when we started. This new market of things going under contract immediately is, this is very new for the last few years. I mean, I was working at a time where you could have a listing for 3 or 4 years, and that wasn't even that crazy. Now, if that happened, everyone would be, freaking out. So, but I was able to kind of leverage some of my contacts and my network. And then when I was mentored by my previous business partner, we had opportunities. It's just really kind of basics, just mailings and open houses and being out and meeting people and talking to people. It's really not it's pretty straightforward when it comes to that. I think I was pretty fortunate that I met the people that I did. But then it was just really a matter of make your deal. In this market, you don't typically have a ton of people who will just list it low and try to fire sale it. So what I was really able to do was find people who were willing to just make an offer. And today you find so many people are so hesitant to even start a conversation. And I've been yelled at plenty of times, but for every 9 times I've gotten yelled at, we've gotten one deal put together. So, and that's all you really need. So it was really just a matter of attempts. We took a lot of attempts. And once we got the first few deals, I was manufacturing my own listings. And not only were they, my listings and my advertisement, but they were beautiful product when it was done. And at that time, we really didn't have this renaissance of, super modern, new product in Vail and Beaver Creek. We were just kind of starting to see that, and people were still kind of licking their wounds from 2009 and 2010. So to go in and spend the kind of money that we were spending to redo some of these properties was, out of the purview for a lot of people who owned here, and the buyers didn't want to do it. So we ultimately were able to find a little niche there, making that turnkey product for people who want a luxury second home.
Gotcha. And when did this? When did that start? That was sort of before COVID, right? Before the last boom, which I guess we'll get to in a minute.
So I had started doing that. The first 2 deals I did were probably in 2013, and it's interesting too because, and I hate to say this, but there is a margin in my field. How it's represented and understanding what the property is makes a big difference. We saw the first deal I ever did was a very quick flip. There's a set of townhomes in Beaver Creek that are 2,400 feet. It's called Saddle Ridge. And they were 2 bedrooms initially. And one had already been converted from a 2 to a 3 bedroom. And that product sold for about $1,650,000 at probably around 2012. The same square footage, another unit came on for $1,295,000. And just in that, I was like, well, why is there a $400,000, $350,000 difference? And was able to loop in an investor and say, well, if we can buy it for 1.2 and split the bedroom and add a bathroom and spend, $75,000 to $100,000, I think we have at least a $350,000 margin. And the numbers made sense immediately. And we ended up getting $1,850,000 for it. And that's the type of deal where it was a little common sense type stuff. And that's kind of where I've lived, is how is it being represented? Is there a higher and better use for this? And so that was probably 2013, 2014. And since then, I've probably done a deal or 2 like that a year, pretty much up until COVID.
Gotcha. So what did COVID do to the Vail market? You know, I know what it did in the Southeast and the Sun Belt, but in a luxury or a market that was always somewhat luxury, and I think becoming more and more. It sounds like becoming more and more luxury. You know, even over the last, it was always high end, but it sounds like it's gotten to a different level.
It has. We have seen pricing for very exclusive, well done product approach 5,000 a foot. This is you're talking a handful of markets around the world that are hitting pricing that we've hit here. Other ski resorts, Aspen, Telluride, there's other markets that have hit numbers like that, New York City, but not many like it. COVID changed the fundamentals of our market 100%. Remote work made it accessible for people to enjoy their homes more of the time. The amount of money that was pumped in the economy, along with, and a lot of these people are business owners. They own, companies. They were supported during, a lot of the negative, or a lot of the COVID, issues, and they could come out here and they could own here and they could be here. So what we've seen is a pretty dramatic decrease in inventory. We've seen people come out here and want to be here. We've seen demand go through the roof. We saw rates really make it accessible for a lot of people to own homes here. However, we have so many, I would say, people with insulated wealth where it's just, they have so much money that we have not seen the drag from rates at all price points yet here. But overall, we've seen massive appreciation over the last few years. And at the same time, we've seen the demand and the pricing for newer product or remodeled product significantly outpace things that are not remodeled. The things that have made it a little difficult to navigate has been, just construction costs and access to materials, which is not uncommon to other markets. We just kind of get squeezed a little more with our labor, the amount of labor we have, and, just the overall kind of fundamentals of a second home market. We just don't have that many people. And when you have that many people coming in, tearing down homes and remodeling at the same time, it puts a squeeze on the labor, and it drives the prices up pretty dramatically.
Yeah, there's not that many places for the laborers to live. I mean, I'm sure the high-end contractors do well, and some of them probably own some of those high-end houses. But if you're entry level laborer, you're I don't know where you're living. Maybe the construction guy's putting you up for a couple months, or is there, where do they live?
We've seen that, and there's been a push down valley. A lot of the laborers that were here, we didn't see a ton of inflow of labor. So a lot of those people were here. They were just inundated with work. And most of those people live about 30, 40 minutes down valley from Vail, and neighborhoods like, even closer. Some people are probably in, Minturn, Avon, Eagle Vale, but probably the majority are probably a little further down in Eagle and Gypsum, which is about, on a good day when it's not snowing like today, probably 40 minutes. So there are communities that are not Vail within a reasonable distance, but that product has also seen a huge spike in appreciation.
Gotcha. Yeah, you mentioned something about interest rates, and it makes a lot of sense that there's enough wealth that it really doesn't move the needle. But at the same time, those that locked in, those that just looked at a 3% rate and said, "Let me lock in for 30 years at 3%." I think that's going to keep inventory down as well for those that maybe might have sold, or instead they're just going to rent it out because they probably got the cheapest loan they'll ever have. So, and we're seeing that in many markets across the country. And I read a statistic that 40% of households actually don't have a first mortgage, and 30% have locked below 4%. So I think that supply shortage is going to continue in most markets. Even a few markets may deserve a small correction, but as far as something like 2008, I have a hard time fathoming. I just think it's different this time around.
I would agree with you. There was an expectation that with rates jumping the way they did, we're going to start seeing people wanting to get out. But I agree with you. I think the majority of people locked in pretty strategic and attractive debt. I will say that the ability to to sell the property has changed dramatically. So, are they sitting there saying, I have to sell for the most part? No. Do I think there are going to be instances of people who want to? I think so. But oddly enough, I just listed a place down the street from here, and I thought the $1 million to $2 million market was going to be the heaviest hit, where somebody maybe stretched for a second home based on the rate. Maybe rents didn't stay up as high as they thought from a short-term perspective, and maybe they'd need to unload. And we really haven't seen that. And then the crazy thing is that the inventory has stayed so low that with this property, I put it on, and within 2 days, I had 3 offers and 30 showings. And I still am getting people calling and saying, can we put in a backup? And that's at $1 million, $1,475,000, excuse me. And that's really where I thought it was going to soften. And we ended up going under contract cash. So I think overall too, I wouldn't say this is necessarily fundamental for every market, but the people who want to be in Vail and can afford it, there's a lot of money out there in the world. And I don't know if people are necessarily ready to wait 5 years to enjoy their home up here or to have a home up here. And I think they're willing to maybe unload the cash initially and wait for rates to adjust or become a little more attractive before pulling the money out later. And we're seeing that. And I mean, it's a fun dialogue for me to have with homeowners because you're one of 2 properties within $500,000 of that price point in Vail. Like, there's nowhere else for people to go.
It's a great situation to be in as a seller. Still, it's good to see that. It's just very well insulated from the rest of the market. So let's change gears a little bit. You've obviously built a very successful business, and you're active in real estate both as a broker and investor. What was your path to looking at more passive investment opportunities to balance out your full time brokering and investing?
Well, I've told many of my friends this and colleagues this. I don't want to have to sell for the next 40 years. I don't want to be 75, 80 years old and negotiating deals. I think I'm very fortunate that initially a few of similar deals like the ones that we've been involved in, my father actually got involved in on the East Coast with a friend of his who managed apartment buildings, and they had a small piece of syndication that they offered, certain people, if you knew them, on bigger deals, similar to what we have, where there's a piece that can go to certain people. And I always found those fascinating. I own a bunch of rental properties myself, and you and I are on the same page where it doesn't really help your hairline to have a bunch of rental properties and tenants. So, it's more that passive side of it where, if you fundamentally, I agreed with a lot of what these deals, how they were structured and what they were doing. And to be involved in that and then not have to get the phone calls at midnight, it's pretty nice. And it allows me to hopefully down the road continue to sell if I want. But you do enough strategic investments like this, I think it creates a little bit of freedom on the back end, assuming it executes the way you hope.
Absolutely. And then obviously there's some significant tax benefits as well, being in real estate professional status, but also getting into the larger syndicated deals. Typically the amount of tax loss you can get on paper is significant, and it could offset a lot of your other rental property income. But unique to real estate professional statuses is once you qualify, it could actually offset your overall income as well. Did you kind of know that going in? Was that part of the strategy, or just sort of was a welcome bonus?
William and I talked about it, and fortunately my accountants have been on that for a while. But that was just an additional benefit. I didn't do it specifically for that, but I'm not going to say no to those benefits if they exist. And I typically don't like to let the tax tail wag the dog in my life in general, but when you can kind of hit both, it's a no-brainer. So definitely utilizing those tax strategies has been a nice benefit. And like you said, it's anything you can do to kind of lower your exposure there is a positive in my mind.
Yeah, absolutely. I completely agree. You can't let the tail wag the dog. I've seen some opportunity zone deals that we've passed on where, all they talk about was opportunity zone, but then, the numbers were almost secondary. The deals need to make sense on their own. So completely agree there. And thank you for kind of pointing that out. I think that's something everybody should know. So you got started, and both of us got started kind of right after a crash, and we're not quite in a crash now, but it's sort of a different world over the last couple of years, just given rates and inflation. What kind of advice do you have for someone getting started today, whether it's as a broker or trying to get into real estate investing if they're just getting started now?
My advice is to do it. Is like, don't be afraid of it, but I would say definitely find people who are good mentors. I've seen a lot of new brokers come into the market in the last 2 years, and some of the talk tracks I see them have with some of their clients where it'll never go down. Like, some of the things I've heard people say is, borderline irresponsible. And I'm not saying I have a crystal ball either. I don't think any of us do. I think having a really good understanding of the market and a history, and I remember the days where there could be a 30 or 40% premium from one side of a building to another if you understood what the market was. And we've seen a lot of people come into this market now lacking that nuance and that understanding of how hyper focused this market can be. And you have people kind of painting a wide brush with kind of taking algorithms and looking at it from like a zip code standpoint. And I can't tell you how many times I've gotten yelled at because Zillow decides that a 10 million property is only worth 3 million. And it really takes a little bit of time and expertise. So I guess my best advice is find somebody who needs help, who has consistently shown success in this market and can give you that institutional memory. And then the other side of it is, really understand what you're doing. If you don't have the type of money to really jump into these things, it can put a lot of pressure on your shoulders. And it's always good to win on the first one. I was very fortunate that the first property I bought and was something that really was creative. It was 3 units, but it was in a single family home. And I've never paid a mortgage payment in my life. And because of that. And, if you can kind of identify that and look strategically and understand that, like, that can set you up and springboard you to, very quick financial security. Whereas, hey, you buy that second home that you think you can own and, all of a sudden the rates go up and your job security goes down. Like, that's not the conversation you want to have. So I think be very prepared and be ready to sit in it for a while and try and find that winner on the first one.
Yeah, that's great advice. One of my early mentors, drilled into my head that the number one reason that investments fail or businesses fail is being undercapitalized. So, especially in a market where rates are expensive, prices are still kind of towards the top end. There still could be great long-term deals, but don't over leverage. It's better to sometimes take on a partner, have a proper capital stack with lower loan to value, and plenty of leeway to ensure that you have positive cash flow. I feel like every upcycle, people forget about cash flow. It's
funny. I talked to one of my good friends. He's been a mentor to me for 10 years, and he's said, I always look for yield and I always look for cash flow, and it's never taken me in the wrong direction. The other thing I would say out here, and it kind of goes back to this market specifically, because I think we see a little bit more of this here than in others, but the delta between new and shiny and ugly is very big. And I like to buy ugly. It's weird. It doesn't always work, but I found that if you're willing to put in a little sweat equity and be a little creative, you usually end up getting a little bit more on the back end than the person who just comes in and buys it. And I laugh about this a lot because, up here, the word investment's thrown around a lot, and oh, it's a good investment and I can rent it. And the majority of brokers here, I would say in general, don't understand what a real ROI is or what most, investors are looking for. And I've just always looked at it and said, I've seen people compromise on location and fundamentals because something is shiny and they didn't have that vision. And then they look at it a few years later and they go, oh, why did I buy in this spot versus something else? Right now, everybody looks smart. This market has kind of validated a lot of people who in a different market would not have looked this smart. But I just kind of go back and I'm like, there's a reason like location and fundamentals are so important. So I think if you stick to some of those two, you'll be okay in the long run. And I just laugh because if everything was going to appreciate the way some of the brokers here say it's going to, there's no sense in remodeling anything. If you're going to write in 10, 15% appreciation, there's really no value to you doing the work in the first place. You can buy any property and you're going to get that kind of return. And I think we're going to be going away from that here really quickly. So,
yeah, this is fascinating for me just because I've always been sort of a workforce housing, middle class lower. We've had a few here and there when I was in the mortgage business where we foreclosed on multi-million-dollar houses. But, in general, we've always been sort of on that, middle class to workforce housing end of things. And I just personally don't have the eye for it because I've never lived it. So, I couldn't imagine taking on like a high-end flip where I have to choose between Sub-Zero or Wolf. And I don't know if that has a pricing difference or not, or I don't know all the brands of Italian tile. But what you just described as far as the remodel, not remodel, it happens in every market. There are $1,200 apartments right now that the business plan was to spend $7,000 to remodel and get $1,595. And the market with inflation and appreciation and frankly, that base of renters being priced out of single family because mortgage rates have doubled. A lot of those are getting $1,595 with light or no renovation. So it's sort of reverberating through the entire market, even the multi-million-dollar down to the $1,500 apartment that's happening everywhere right now. And we're still making sure we're selective. We're just renovating slightly less units than we would have. In some cases we're just renewing the leases and saying, hey, we're going to renovate this and get $1,595, or you could pay $1,500 now. And right. People are taking it because they look around and there's no other supply on that market as well. I mean, the supply never caught up after 2008 anywhere or in most markets.
I agree. And that's actually what I'm looking at doing right now. I actually spoke with William about one today, potentially here. They're weirder deals here. It's harder to figure out, but I think fundamentally, and this is one of the reasons why I liked being in the fund and why I wanted to invest in some of these deals was, regardless of whether or not the waterfall hits because of a refi in a year, I don't know where else you find these returns. And the rental market, I've just found that the rates have not only disincentivized a ton of new building, which we're already behind, it's the amount of shortage that we're already seeing is there. And, I'm just looking around at all of I don't have a metric for it, but a lot of the stuff that was rentals here has already changed into a luxury second home. So that the replacement of that is going to be impossible now. So I think across the board, just having homes that, or just as many doors as you can find and just keeping them rented for the most part, especially if you have them stabilized at a reasonable return, is not a bad place to be. Eventually that'll happen. But if you're, cash flowing properly and, doing what you need and keeping them rented, I know developers and back home that weren't as good about keeping the occupancy rates as high as they should have been, and it bit them later. So if you can keep people in them, and it doesn't seem to be a problem, I'm pretty confident in it.
Gotcha. So just like me, you're mostly real estate, but I am curious, do you do anything exotic? Did you get into crypto at all? Is there anything outside the norm that you've, taken a chance on in the last couple of years?
Honestly, no. I'm a firm believer in do what you know. I've really kind of built my business in such a hyper-focused manner that even in other markets, I really don't do a ton of real estate. Um, the crypto thing, I'll just tell you up front, I'm just not well versed in it, and it's just not something I was really excited to throw money at. I've just, you know, I just always focus on what I know and what I'm comfortable with, and it's panned out pretty well.
Yeah, no, it makes a lot of sense. It's just something I've asking most of the guests just out of curiosity, because there's some people I was completely surprised that were, way deeper into crypto that I would have never thought, and then there's others where it makes perfect sense, and I'm not surprised at all. So I'd say I'm not shocked by your reply, but I also wouldn't have been shocked if you had a few bucks too. I know.
I have $500 in it. It's. I have some friends who are heavily involved, and they just said, "Hey, will you pick some up and like you can get this token or whatever?" And I was like, "All right, fine," but it's not. I've probably played bigger hands of blackjack than I played. Than this.
Yeah, those that are into it. Play. Yeah, those that are into it, they're super evangelists. So I've got a small position. In the scheme of my net worth, it's a small position, but it's like to me, it's the doomsday hedge. If Peter Schiff is right and the dollar collapses or something like that, and Bitcoin goes to $1 million, then I'll have a few dollars. But yeah, I think it's smart. It makes sense, and it's a good lesson to generally, and for as much as I'll enjoy a shiny object for a period of time here and there, I do stay reasonably focused, and I limit my tests to ideally a small amount of my time and overall capital if I'm going to dabble in something too far outside of my wheelhouse. So,
and it's funny you say that too, because like it's fun. I think there's something to be said for it, and doomsday scenarios, and if it goes right, it goes right. And plenty of people have made plenty of money trading cryptocurrencies, and I'm not going to knock it. It just what I've always loved about real estate is just the tangible aspect of it. Not only do I love it in general, just from a financial standpoint, but here it's just fun. It's beautiful product. It's fun to talk to people about. Everybody who I get introduced to, they're like, "Oh man, you do this in Vail." Like they're just eyes light up. So to me, that's I enjoy it, and like, yeah, I maybe squeeze out some money if I got a little more creative or diversified in other things, or tried to take a few more shots, probably. But I enjoy this, and it served me well. So
great. And you've pretty much avoided the stock market. Do you have anything in the traditional like stocks, bonds, boring stuff, or are you really all real estate?
I do, and that's really where I kind of push just for the tax benefits. I'm not a trader. I'm not somebody who goes out and if I could value companies and if I could value stocks the way I value real estate, I would probably be more apt to do that. But to me, that's, it's just not really where I focus. I do have a position just strategically for tax benefits and things like that, but I haven't, that's not really where I focus.
Yeah, that makes a lot of sense, and really appreciate you sharing. But before we finish up, what are your goals for the year? It sounds like you have a new possible investment property you're looking at. Like, what else? You have anything else? Your big goals for the year?
After the last 2 years, I think everyone was a little burnt out. It was, especially just in this industry, it's nobody feels bad for a real estate broker. But at the end of the day, it's the people who are hustling. It's still a lot of work. And, so I kind of made a point to travel a little bit, say yes to a few trips that I probably otherwise wouldn't have done. And in general, I'm just looking to grow my network. I'm trying to, position myself here with a few deals. I've already found, like I said to you from the beginning here, I'm actually sitting in a property that we're currently renovating and looking to sell as a flip, basically. And I'm under contract right now on 2 others. So there's still demand. People, it's a little more, we're not expecting full price cash over asking, but I think my goal is to be consistent and to continue doing what we've done. And fortunately, the last 2 years have felt borderline unhealthy to me. And I'm actually looking forward to kind of the deal structure that we've seen for 10 years, where, you can actually put in an offer and have a dialogue, and you're not at the seller's complete mercy all the time. So it's been a little fun to go after some new stuff with a little different climate.
Yeah, no, that's great. Yeah, it'd be nice just to get back to a new normal, but yeah, I completely agree with that, and I think it's healthy for the market as well. So if somebody's looking to invest in the Vail Valley or buy a second home, how does someone get a hold of you?
I have a website. It's finvail.com. My last name, just FINNVAIL. I'm on my phone all the time because I'm a broker, so I can give out my cell phone number here if you'd like me to. But I'm not shy. You can find me. And yeah, I think I have an interesting perspective on this market that differentiates me a little bit from where a lot of traditional brokers and agents have kind of looked at property. So happy to share my insights with anybody who wants to talk.
That's great. Well, thank you so much for taking the time to be on the show and your support of our investment fund and projects. And look forward to staying in touch and doing more deals. And we'll put your information in the show notes as well. So we would definitely encourage anyone who has any interest in the Vail Valley to reach out to Ben. And please remember to like our channel on YouTube and give us a 5-star review on Spotify and iTunes, and connect with us we're on all the social media platforms. We even just launched a TikTok account. So going to get my first dance move ready for TikTok. I don't know if you've gotten that far for your social media presence yet. It seems like they're taking over.
People have asked. I don't look like I can dance, but I actually got some strong moves. And but no, thank you so much for having me. It was fun to chat with you and put face to the name. And we'll be around if we can help at all.
Sounds great. Hopefully we can catch you in person. I got to get out there at some point and make my rounds in Vail. So
the snow's great. Come on out.
Awesome. Well, thanks again, and everyone, we'll see you on the next episode.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at alternativeinvestormastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.